Hello everyone, I'm Shalini Singh, Assistant Professor in Department of Commerce at GEMS Engineering Management Technical Campus. Today, today we'll discuss about the computation of incomes under the head's salary. This is the part of first income earned under the head total income when we'll be computing the total income. So this is the first head of the income. This is the lecture 2 of unit 3. Let's begin. What is the meaning of salary? Salary under section 17 subsection 1, it gives an inclusive definition of salary, which includes wages, any annuity or pension or any gratuity, any fee, commissions, perquisites or profits in lieu or in addition to any salary or wages, any advance of salary, any payment received by an employee in respect of any period of leave not availed by him, employer's contribution to recognize provident funds in excess of 12% of employee's salary and interest credited to recognize provident fund in excess of 9.5% per annum. The aggregate of all the sums that are comprised in terms is in the transferred balance of an employee participating in a recognized provident fund to the extent to which it is chargeable to tax. Then any contribution made by central government or any employer to the account covered under the pension scheme referred to in section 80 CCD, all transferred balance in a recognized provident fund to the extent it is taxable. So although these incomes are included in salary, but there are certain incomes that are certain incomes which are mentioned here, which are not either fully exempt or exempt up to a certain limit. So the aggregate of above incomes after the exemptions available, if any, is known as the gross salary. So from this gross salary, there are few deductions that are allowed under section 16. That is, so under section 16, if we define, then there is a standard deduction to a maximum extent of rupees 40,000 rupees, which was with effect for the assessment year 1920. Second was the deduction for the entertainment allowances, which we later will see. Then deduction on account of any sum paid towards on the tax of employment, that also we'll see. So after allowing these deductions, we arrive at the total income of under the head salary. So computation of salary income from section 15 to 17. Salary income of an employee is to be computed in accordance with the provisions laid down in section 15, 16 and 17. Section 15, as discussed, gives us the scope of this head and tells us that which income shall form part of this head. Section 16 gives the deductions to be allowed out of income taxable under this head. As I told you, there is a standard deduction of maximum limit up to 40,000 rupees. Then section 17 defines the word salary as it is mentioned in section 17, and section 17 subsection 2 and 3 further defines the terms perquisites and profit in lieu of the salary, which is a part of the head under salaries, and these can be depicted in a form of a chart. There is a flow chart which I have drawn here. That is, first we have a salary which is defined under section 15, then there is reduction under 16, then defined under 17, then salary is defined under section 17 plus allowance is defined under section 17 subsection 3 of 3 clause 2 of income tax act. Then we have perquisites section 17 subsection 2. Then we have profit in lieu of salary, that is also defined under section 17 subsection 3. After adding all these heads, we lessen the entertainment allowance, that is a form of reduction, which I told you under section 16 subsection 2, and tax on employment under section 16 subsection 3. These, after deducting these and after reducing these deductions, we come to the income under the head salary. So this is how a salary income is computed. First of all, we have basic salary, that includes pension, annuity, bonus, commissions, areas of salary, advance salary. Here we'll write it. Then we'll add gratuity or any leave encashment or computed pension or any allowance after claiming exemptions, if any, is available under Section 10. Then that will be defined under different heads in different through in a serial order. Then after that we receive the total. That total we add the value of perquisites or the profit in addition to a lieu of salary. Then there are different profits of perquisites which is serially mentioned. Then later we get the whatever the total do we get. Then we there is an employer's contribution to uh, recognized provident fund in excess of 12% of salary of employees, interest credited or to recognized provident fund in excess of notified amount. Then the gross salary is calculated after adding the items from first to five. Then deductions are allowed under Section 16, that is standard deduction, entertainment allowance, and employment tax. Then after that, whatever total is received, that is the total income which is chargeable under the head salaries. Okay. So there are different forms of salary income, and it tells you what is the treatment of tax on that, whether it is taxable or is it exempted. So let's see, there are different receipts like basic salary, it is taxable. DNS allowance or pay is taxable. Advance salary is taxable in the year of receipt, in which year you receive the advance salary. Then area of salary, it is also taxable in the year of receipt. If it is not taxed on due basis earlier, then it will be taxed in the year of receipt. Leave encashment, while you leave encashment if you receive at the time of service, that is also taxable. Leave encashment at the time of retirement or at the time of leaving of the job, then it is exempted in the hands of government employee. In case of non-government employee, it is exempted in some cases. In government, it is totally exempted, but in some cases, in non-government organizations, it is exempted to in some cases. Salary in lieu of notice, it is taxable. Salary to the partner, not chargeable under the head salaries. If your partner or spouse is receiving a salary, that is not under the computation of your salary income. But it is taxable under the head profits and gains of the business or profession. It will be a part of profession. Profit and gains from the business or your profession. Then fee and commission, it is also taxable. Bonus, taxable on receipt basis. If it is not taxed earlier on due basis, then it is taxable on the receipt basis. Then gratuity, it is exempt in the hands of government employees, and in case of non-government employees also, it is exempt in some cases. More or less, it is totally exempt. Then monthly pension, that is uncommuted pension, that is it is also taxable. Lump sum payment of pension or commuted pension, that is exempted in the hands of government employees and non-government employees, it also depends. Then pension under the national pension scheme, at the time of receipt of the pension it was chargeable to the tax, but now there is some changes. Annuity from employer, it is taxable as salary. Annual accretion to the credit balance is recognized provident fund, that is excess of employer's contribution over 12% of salary is taxable. Excess of interest over notified interest is taxable, that is notified rate of interest is 9.5%. Then retrenchment compensation exempt from tax to the extent of least of the following, that is number one, amount calculated under section 25F subsection B of the Industrial Dispute Act, and an amount specified by the government up to rupees 5 lakh, that is exempted. Remuneration for extra duties, that is fully taxable. Then compensation received under voluntary retrenchment scheme, VRS, that is exempted in many cases. Profits in lieu of salary, it is taxable, and salary from UNO is not chargeable to tax. So these are the different forms of salary incomes which we receive, and this is the treatment of tax. So under section 15, how a salary is defined is what are the basis of charges. Section 15 stated that following income shall be chargeable to income tax under the head salaries, that is any salary due from an employer or a former employer to the SSC in the previous year, whether it is paid or not. Any salary paid or allowed to him in the previous year or hereby or on the behalf of the employer or from the employer, though not due or before it become due to him, or any arrears of salary paid or allowed to him in the previous year by or on behalf of an employer or a former employer if it is not charged to income tax for any earlier previous year. Now comes few essential norms. Salary is taxable on due or receipt basis, whichever is earlier. If it is received today and had been due for last 2 3 years, then also it is taxable. But if it is not due and it is received at present date, then also it is taxable. Relationship between the payer and the pay. Then employer and the employee relationship is also taken consideration whether to charge them or not. Remuneration paid to the person in respect of the service rendered. So these are the few norms which defines the taxability of the incomes under the head salary. In the next class, we'll discuss about the different heads which comes under the meaning of salary and what is the meaning and how it is treated in the income tax. We'll discuss about it. So for now, that's all for now. Thank you.